What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this update video is we're going to be going over that ORTEX short interest and utilization, but that is not the most important piece of the ORTEX data that we're going to be taking a look at. That one piece is going to be the cost to borrow rates that we have seen on a steady decline over the last couple of months. Now, this is going to come more into effect once we talk about these institutional purchases and sales of AMC over the last quarter. And we actually received some really solid news yesterday. If you guys remember from any of my previous videos or live streams, we were looking for the top 3 institutions in my mind to add to their AMC position. We had BlackRock increase by a very significant amount. We had Vanguard slowly step up their AMC position, but then Renaissance. Renaissance is the highest performing hedge fund of all time, and they have substantially increased their position on AMC over the third quarter, which I think is incredibly bullish. Now, we also have to talk about the max pain price of AMC and what it's been this week and what we have going forward, because what I'm going to show you guys is kind of how the max pain price is going to start to get stepped up over the next couple of months. Now, when we see the close of AMC on every single week, we finish right around that max pain price. If we start to see that max pain start to go up, then most likely the market makers are going to be pinning AMC at higher prices. So we could start to see that slow stair step up. Now, getting into the title of what this video is, hedge funds getting liquidated. Now, that is not clickbait at all. There is a date coming up where it is the last day of the year where investors who are putting their hard-earned money into hedge funds have one last chance to liquidate their holdings from that fund if they would like to. Now, there's a very interesting train of thought here that I want to go through with you guys and how this is going to be very important for not only AMC, but for the broad market going into the next couple of months. So before we get into all of that information, if you enjoy the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So AMC closed the week at $40 a share. Lots of volatility this week with earnings. We ran up into the upper 40s. We got sent right back down. We had the Adam Aaron news, and then we started to make our way back up. That is very typical of what we see after AMC's earnings, and I do think that this uptrend could definitely continue. Now, coming over to ORTEX, we're just going to do a quick update here. 84.96% utilization, and the estimated short interest, 16.65%. The last time that we got the numbers from the exchange, we were seeing it at about 18.48%. Now, let's take a look at the max pain price going into next week. So over the last couple of weeks, we've seen the max pain price at 36, 37, 38, 39, and then over the last 2 weeks, we've seen the max pain right around 40. Now, what this chart shows us is where the concentration of open interest is on the options chain. And the open interest is just the amount of contracts that people or institutions are holding at any given time. But there's something important about what the option chain is looking like, and the highest strike out of the money is for AMC at this time. Now, going over and taking a look at AMC's option chain going into this next week, again, it is a monthly options expiration date, so it is possible that we do see a little bit more volatility just due to the fact that we are going to see increased open interest and the market makers are going to have to delta hedge a portion of these contracts that they are selling. But the key thing that I want you guys to look at is the furthest out of the money strike. It's $95. Now, this is not a recommendation to buy or sell any options. Nothing I say in these videos is financial advice. These are for educational and entertainment purposes only. But when we're looking at this strike right here, if we only can go out to $95 a share, it means that the concentration of these strikes is going to shrink a little bit and be closer to where the stock is currently trading. Now, a lot of people are very bullish on AMC, so they're going to be buying these 1 week to expiration call options or 1 month to expiration call options. But when we see that the furthest out of the money strike in December increases all the way back to 145, well, then the concentration of these options are going to be further out of the money, meaning that these institutions, if they are pinning the price, don't need to push it down as far. And we are already seeing that reflected in the max pain price going into that December monthly date. We're seeing it $1 higher at $41. So that is going to be something that we need to keep a lookout for going forward, because if this max pain price starts to keep going up, we pretty much have a good understanding that we finish around that max pain price every single week anyway, we could start that stair stepping up. Now, let's get into this big institutional purchase of AMC and have a conversation around institutional purchases and sales. When we're thinking about Renaissance Technologies here, first of all, they are the most successful hedge fund of all time. When we were looking at those top 3 institutions of who I really wanted to see increase their AMC position, it was BlackRock, Vanguard, and most importantly, Renaissance. Renaissance increased their position by 38% and are now holding a little over 2.5 million shares. When we think about who Renaissance is and what makes them the most successful hedge fund of all time, Renaissance's flagship medallion fund, which is mostly run for fund employees, is famed for the best track record on Wall Street, returning more than 66% annualized before fees and 39% after fees over a 30-year span from 1998 to 2018. That is an absolutely insane return. Now, I know a lot of people, after talking about these institutional purchases and sales, are going to say, well, yeah, that could be bullish that these institutions are stepping up their position, but they could just be loaning out the shares. I don't think that's a very good argument at the current time, and here is why. When we take a look at the cost of borrow rate on AMC, back in May, it was about 19.93%, meaning that if you were buying shares to loan out, you had a 19.93% buffer to the downside where AMC could fall and you would still be in the green. Right now, that cost of borrow rate is between 1 and 3%. So if on the off chance that AMC falls over 3% by year end, or the time frame that these shares are going to be out on loan, then these institutions would be down on their overall position. And it doesn't make a whole lot of sense for them to just be buying shares to loan them out at the current time. We've seen other stocks like Prog and any of these other potential FTD short squeeze plays with cost of borrow rates much higher than what AMC is. So when you think about the risk versus return, AMC is not the stock to be doing this on. The second thing is that even if they are loaning out these shares, well, we know that these institutions can forcibly recall the shares that they've loaned out at any given time. So we know that we're kind of potentially maybe getting into that next run-up period. So if we start to see the run-up in AMC and these institutions want their shares back, they can force these institutions that they've loaned the shares to short to cover their positions. So I don't really see the validity of the argument that institutions are loaning out shares right now. I just really don't see it. Now, let's get into this situation with hedge funds getting liquidated. So November 15th is a big date every year for hedge funds. So this is an article from 2018. We've seen articles from 2008 circulating around, but November 15th, around this time every single year, is a very big day. You won't see this marked on any calendar. In fact, Wall Street would prefer that this day not exist, but it does. The day by which big investors need to let hedge funds know that they are withdrawing money. The money won't come out until the end of the year, but managers of hedge funds need to know how much of their stock and bond portfolios they need to liquidate ahead of time because of redemptions. Now, a lot of people are going to look at this and say, well, Citadel's hedge fund side is most likely going to see a lot of redemptions, but when we look at what is exactly going on here, a lot of these people who are investing in these hedge funds are only going to be withdrawing their positions if the fund is underperforming or they're down on their investment. And when we come over and take a look at how Citadel's hedge fund side has been performing over this last year, Citadel's multi-strategy flagship fund Wellington gained 7.8% in September, bringing its year-to-date performance to 18.5%, according to a person familiar with the returns. So Citadel is performing pretty well this year. But there is a little bit of a caveat to this. Ken Griffin and Citadel have been in the media much more than they would like to over the past year since the situation back in January started to play out. Then we were speculating a lot that the reason why Citadel was putting out all of these tweets back in September was to try to calm their investors down. So if investors are going to be leaving Citadel, it wouldn't be because of the returns that they're receiving. It's because they don't want to be in the public eye. Now, how does this date coming up, this November 15th date, this period where investors need to let hedge funds know if they're going to be liquidating some of their positions out of that fund, how does that affect us as AMC investors? Well, it might or might not affect us. Thinking about how these institutions would most likely get into these sales of positions, they would most likely sell positions that are in the red for tax purposes. They wouldn't really want to sell positions that are in the green because then they would most likely have to pay short-term capital gains, the highest tax rate on that position. So it is possible that if these institutions are over leveraged on a short position on AMC and they start to get a big wave of redemptions, they could close out the positions that they are most down on. The second way is going to be a little bit unrelated. We could just see overall market volatility start to pick up. What we really need to look out for here is something that I've said a lot in my videos over the past couple of months, is this little pyramid of people betting against AMC. At the bottom, there are going to be a lot more institutions that might have smaller short positions, and at the top, there are going to be a couple of institutions that have much larger short positions. Those institutions at the top are probably going to be the last ones that want to get out just because of how large their position is. The institutions at the bottom, though, are going to be the ones that are going to be causing these short-term price run-ups and the ones that could start the big run-up. Now, a lot of these institutions over the last year have been wildly over-leveraged. We've seen the margin debt reach all-time highs a couple of times, and they could be down on a lot of positions. But this is going to be a date that we need to look out for. But again, this is not a date that everybody needs to go out and say, oh, we're going to squeeze by this date. I don't want to see that happening. This is just a date where hedge funds could have even more pressure put on them than they already have. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great weekend, and I'll see you guys in the next video.